So you're probably watching this video because you lost a lot of money day trading the Forex markets, crypto, whatever. So I'm here to help you with your trading psychology. The mindset that you have to be a day trader and to be a successful day trader is very systematic. So in this video, I'm going to give you 5 rules that you must follow in order to be a good trader, to improve your trader psychology and to relax when day trading. Welcome back to the channel, everybody. My name is Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable on a consistent basis. Okay, so people do not type in trader psychology into the search bar unless they've lost a substantial amount of money. So first, let me say I'm sorry that you lost money, but second, let me tell you that I have done the same, and I'm here to help you with your trading psychology. Here's what you're probably doing. You are getting into the markets, you're watching price action, and you're seeing movement, and you get in on a trade with no other analysis besides the fact that the price is trending up like crazy. We just had this huge spike. I'm going to get in, or I'm going to get out as quick as possible, just scalp a little bit, make some money, and walk away. You get into profit. You don't take it because you think it's going to go even higher, then it goes reverse. And you're like, no, it's going to go back to where it was, and then I'll make more money. And then it keeps going down and down and down and down. And you're like, no, eventually it'll go back up to where I entered and I'll get out at break even. This snowball effect completely fucked you. You got in on a trade with emotion and you didn't get out even when you were in profit, and your loss threshold does not exist. So you blew your account eventually. If this is you, welcome to the club. You are a part of the 95% of traders that lose money. But that's okay because I have a solution for you guys. So jumping onto the charts, I want to show you one example of how this happens day in and day out. Now, I can't express to you enough how perfect this is. Ready? We see this big sloping green up, everything's going. We get this massive bullish engulfing. We've broken previous levels of whatever. You get in on a trade. The next candle, it starts going red. But because you don't have a good strategy and your stop losses are too tight, these 2 next red candles stopped you out. Then it starts consolidating, and then you get another bullish candle, and you're like, oh my God, I'm gonna get in on this, it's going up. So you buy again. Stop losses are way too tight. Next 3 candles stop you out. This next candle goes up, and you're like, oh my God, see, I knew it was going up the whole time. I'm gonna get in on this, and I'm gonna hold it. Stop loss is too tight, you get stopped out. It happens again and again and again and again to the point where you're like, okay, last one, I'm holding it forever, and all it does is go down. This is the typical waiting for the gambler mentality of trading. Like, people capitalize on this day in and day out. This is why you have to have a rules-based trading strategy. What do I mean by rules-based trading strategy? When you are starting out day trading, you have a strategy, right? And then you back test it, and then you demo it, forward testing it. This strategy is the only thing that you should use. So say, for example, your strategy is a moving average strategy, and you only go for short positions when it's below the 21 SMA and long positions when it's above. What you also need to have is multiple confluences. So we are below the 21 SMA. We're showing bearish momentum. That's 2. And then let's say you're using doji candles as a part of your strategy. Then you get a doji bearish engulfing, and you're like, cool, I'm in on a trade. That is 3 confluences that you use to enter your trade. That's what having a rules-based trading strategy is. You have to have these 3 things minimum to hit in order for you to enter a trade. You do not get in on a trade because the price is going. That's wrong. Never place a trade. Literally, just get a piece of paper, write down your rules. You do not enter a trade until these 3 things or 4 things or 5 things are met. When you're looking at the charts and you're seeing something, don't click the buy or sell button. Check your list. Make sure you've hit every single one of those. Then you'll know it's not emotional, it's strategic. Then you get in on a trade. So, rule number 1 is rules-based trading. You have to trade on rules. Science, bro. Rule number 2, do not trade on emotion. Like I mentioned before, when you get emotional, that's the gambling mentality. That's market manipulation at its finest. Basically, teasing you with something, you fall for it, and you're stuck in a trap. It happens time and time again, and it's why 95% of traders lose. So Rule number 2, do not trade on emotion. Now, rule number 3 is an extremely long topic. I've made a separate video on that. It is risk management right here. Proper risk management when day trading is the most crucial thing ever, because if your rules-based trading strategy is set to where you're risking 1 to 4, meaning that if you're risking 1 to 2% per trade and your reward for that is anywhere from 4 to 8%, that means if you win one trade, you can afford to lose the next 4 and still be break even. Proper risk management is paramount when day trading, and it helps your psychology because it's no longer emotional trading. It is systematic. It is rules. There are techniques that you must follow in order for you to do a trade. Think of your day trading as now being a program. Your trading brain now will not execute a trade unless these parameters are met. Programming is the same thing. They're all if and then statements. So rule number 3 is proper risk management. Never ever click that buy or sell button without having a specified take profit and a specified stop loss in place. Rule number 4 is do not overtrade. The tendency for most people, especially if they're like me and they can sit in front of a computer and watch the charts all day, is to get in on this pair, this indice, this crypto, and it's like 57 trades running at the same time. And it's breaking apart your focus. You're looking at too many different things at the same time, and that's where mistakes come into play. I've done it several times where I'm looking at USD CAD, doing my analysis on that, then I pull up my phone on MetaTrader 4, I type in, whatever, and I place a trade, and I realize that I just placed a trade on GBP JPY when I'm doing all my analysis on USD CAD. Do not overtrade. Do not look at too many indices, too many Forex pairs. Focus on 2 or 3. Too many pairs, too many indicators, too many lines on your charts. Simplify it. It's not complicated. So, rule number 4, keep it simple. And the most important rule of all, rule number 5, do not revenge trade. What's revenge trading? Say you just lost $2,000 on a trade and you're like boiling inside, just furious. And so you're looking for the next move and like trying to get your money back because it's my money and the market just stole it from me. And you start getting angry and you're completely throwing away your rules-based system. You are over trading like a crazy person, trying to get that money back as quickly as possible. And what happens when you trade with emotions? You lose time and time again because the markets are looking for people like you getting emotional, falling for trap after trap after trap. And instead of just losing a couple $1,000s on a trade, you end up losing $10, $15, or $20,000 throughout the day because you're angry and you're revenge trading. So rule number 5 is do not revenge trade. If you are in a bad mood, if you've had an argument with your spouse, stuck in traffic, super anxious, do not trade. If you are angry, turn off your phone, turn off your laptop, get away from the charts, do not trade. It is the worst thing you could possibly do ever. Doing these things, practicing on a demo account, really having a strategy that is rules-based, it completely alleviates all of the emotion from trading. I used to be such an emotional trader where I would get in a trade and I'd start sweating and like, oh my God, is this gonna go? Now, when I place a trade, I look and I have my system and I get in a trade, I set my take profit and stop loss, and then I walk away. I'll go have a coffee, read a book. Like, I have no emotion behind it because my strategy has proven to be successful over time. So I just do the trade and I'm calm all the time. I don't worry, I don't stress about my trades. And it's really, really, really refreshing compared to how I used to trade covered in sweat. So just relax, man. Keep it simple, have rules, watch all of my videos if you want to learn specific strategies on how to day trade. I mean, some people like to scalp, some people like to hold positions for a few days. My videos have a plethora of all of that information. So go through my videos, set up a demo account, start trading casually. It's no risk with the demo account. So that'll calm you down immediately. Then after a month of, constantly trading day in and day out, you'll see, yeah, my system works. Now I can pay in real money, maintain my system, and just slowly get profit over time, building and building and building and building your Forex account or your trading account or your crypto account, whatever you're looking for. So if you guys have stayed here this long, that means that you like the video. So make sure you leave a like on the video. And if you have not already, consider subscribing for more videos like this, and we will see you in the next one.